Good morning. Good morning, everybody. YouTubers and stock twitters, giving you a little spot view here. It is Monday, October 10th at about 9:07, and the markets are lifting off. They lifted off. It's almost a carbon copy replay of last week. They started, I can't show you at the moment Swing Machine because we have this view kind of mapped out and I'll destroy all my Zoom writing, and I don't want to do that. So, but I can tell you the ES contract went long at 525. The ES on Swing Machine is up 1300. The NQ went long at 535. 10 minutes later is up 1400. The YM went long at 515, up 1000. The Russell went long at 510, is up 640. The VIX started coming in, and we think the VIX will come in at 710. And that's, I don't know what's wrong with gold. Gold is still on its arse from last night, down handsomely. Seems strange. And our little program here, we turned on this program from 6, well, at the open last night at 6. We ran a live, we videotaped it from 6 to 8. We posted that on YouTube, compressed it to 2 minutes. It got itself to about $800, $850, I think, thereabouts. We continued running live last night until the wee hours of the morning. I think we were 1,200, 1,000, somewhere around there, did pretty well. And then it's added to it this morning. Complete, and it's been running constantly. A beautiful little program, a lot of capacity here to do a lot of different things built in. This is one of our more popular programs. It's proprietary to us. You can specify the number of contracts. You can specify the time. It's just, it's incredible, actually. It's really, really, and you can run it on a whole host of different charting packages, what you might want to do. And so we will let it run. But we're thinking, I think everyone is thinking that we're going to get a market crash on Monday because it's October and the market has been heavy. Now this marks 2 Mondays in a row we haven't gotten a crash, so I think we could see I think we're going to see what we saw last week. I think we're going to see another rip, I think, to the upside today, probably last into tomorrow. And we have, I believe, a CPI number, and the market is becoming enamored, not us. We don't trade narratives. We don't get enamored with any factoid or storyline. But there is developing a storyline, a byline. It's amazing how these things creep into the market. You hear about them from all corners. And there is this perception that the Fed is going to do a pivot or the Fed is going to pause. And they're looking for any indication of a slowdown. Could be the jobs number, could be a CPI, an inflation number. And they're just ready to pounce, thinking that if the Fed sees some slowdown, the Fed is going to ease the pain. Well, they might, but it won't matter to us because the way that we trade is humble. We come at this with the assumption that we know nothing. It's like Sergeant Schultz, Hogan's Heroes. I'm dating myself. I know nothing. Remember him? That guy. I'm that guy. I want to be that guy. There are plenty of other people that will talk about quad 1, quad 2, quad 3, quad 4, inflation, deflation, and the rest of that nonsense. I do find it interesting, right? Because I like to read about it, and it's kind of like a little parlor game. Who's going to get it right? But it's got nothing to do with how we make money and run our trading business. It just doesn't. you can sometimes have the storyline right and the market reacts totally the opposite way. You never really know, so that's why we trade in the here and now. Very, very different. If you're buying and selling options, you really can't play in the here and the now. I mean, you got to go out, and you bring in uncertainty and you get on the wrong side. And here, when we're trading, we're we're in, we're out, we're out, we're in. Not crazy, right? This hasn't been crazy. 24 trading sessions in a month. If you can do $100 a day as a benchmark, it's $2,400 a month. Not bad. You want to take Friday off, you get it down to 2,000, 200s, 4,000. It doesn't take too many days like this, to post 1,700. We could stop. We could stop the rest of the week. Do that 3 or 4 weeks a month. Our members are doing that and then some. They absolutely are. They've worked very, very hard, though. All of them. They had to work through some of the stuff that they've been taught, some of the stuff that they've maybe picked up, and it takes time. It just takes time. But once they're there, they're there. It can't be taken away. But if you have any questions, feel free. I don't have a view on that chat function now. If you have any questions, feel free. We appreciate the like buttons. We appreciate the retweets. The more circulation we get, the more apt we're able to do a little live view. You would think, I would think, we'd have thousands of people, right? Somebody does a podcast on Bitcoin, talking about Bitcoin, they'll have 5,000 people listening to it. It is mind blowing to me. I don't get it, but we come on, we go live. We're demonstrating, right? We're not trying to hand out fish. We're demonstrating what we're doing. Do it over and over again, and people. It is what it is, right? People believe the markets to believe. Their perception is their reality, right? So they want to perceive Bitcoin to be the next Amazon or something, and want to park and hodl. Good. I wish them all the luck in the world. I hope it is for them. It won't be here. We'll trade that thing. We need to do it one of these times. We can trade it. And but if you have any other questions about the market, you want us to plug in a particular stock, we got room. We can plug in a stock. We can plug in a market. And but I'm not going to talk all morning. We're going to watch. We do think that you just get another view. I can see it. You can't. Yeah. So we're all green here this morning after a pretty hard sell-off overnight. And I do think that the markets are set up once again for a bounce. Now they bounced last week, right? We came down. We were looking at a crash-like scenario on Monday. They came in on Monday morning, gave a little stick save. The market rallied and rallied hard, for 2-3 days, and it gapped up, and then we came down and we filled that gap in the last days of last week, but it didn't take out the lows. So I'm interpreting that to have been healthy, constructive, and many times it's the second mouse that gets the cheese. But I will say this, any kind of rally we get, even if we go to 4,200 on the S&P, we have our definition, we have our algos that define a bear market. That's going to take at least a couple of weeks to rid ourselves of the bear market. And I don't see that happening. I don't think that's going to happen for months, if not a couple of years. I really do. But that's what I think. I'm not going to trade what I think. I'm going to just track what we're doing. But in the meantime, we can still have, as odd as this is, so you can be both bearish and yet be long the market, right? You can have a split personality. Reason being is you can be long-term bear, and short-term bullish. and we will see some of these vicious, some great rallies. And it's amazing. It will be like turning the alligator over on its back and rubbing its belly. Everybody will get happy again. And oh god, oh man, whoo, honey, I'm glad that's over. And then the bear will come back and rip them again. It ain't over, folks. It ain't over. It hasn't even started, because if the storyline now is inflation, deflation, and all about the Fed. But they have ratcheted interest rates from the yield on the 10-year Treasury was 0.25 this time last year. It's over 4%. So you can't do that without having a major impact on the economies of the world and here, from household economies to business economies. So those folks, those companies, those institutions, those pension funds that in an attempt to try to get return over leveraged, right? We use leverage, but we talk about using it proportionately, that over leverage will get smashed. They will get smashed. And that's what they're out to do. They are out to smash them. So what I think in broad terms, now we said a year ago that the dollar was getting stronger. We were the only voice. I mean, it was. Everyone was saying cash is trash. No, I did not think that the dollar was going to go as fast as it did. I do think that the dollar long term will be the next bubble. I think it'll get to $1.50, $1.60 over time, years. I do. I'm not in the camp that the dollar is going to zero or going to get crashed. I'm not at all. Not in that camp. And I think the hook has been set. The debt hook has been set, and they have more control now than ever, the powers to be. But I think that we will get this, not a Fed pivot, but a Fed pause. I do think that there will be markers where inflation will seemingly look to be cooling. I do think that'll happen. It may be just around the edges. And I think in that hype and in that relief, we'll get a relief rally, and it could be significant, but I think it'll be just a trap. Because on the backside of this will be the enormity, the reality of what they've done. And then we get into the recession or worse. And that'll be next year's story. And so that'll be the drop that catches everybody, not us, by surprise. And I think that is the drop that'll generate what the headlines will be, is a crash. And if I had my crystal ball, and this is Ouija board stuff, crystal ball stuff, I would put down on my calendar March 5th. I don't know why, but many times it's the 5th of the month. And there are certain months where these markets seem to make a distinct move up or down. And one of those months over the years has been March. The dot-com crash started in earnest in March. The bull market in 2009 started in March. And not just March, it's March 5th. It is the craziest damn thing. So put it down. We'll see where we are on March 5th. But we are not trading any of that. It's interesting. It's fun. It's we're here anyways and see it. We'll just let the machine do its thing. Enjoy the show. We're only going to be on for a brief time. If you haven't sent us your email address, be sure to do so, because we will do some private viewing sometimes for folks that have sent us their email. So if you're interested in that, be sure to do it. The Haynes bottom. Oh, I remember that guy. I used to like Mark Haynes. That was in the days when I actually watched a little bit of CNBC. After that, I didn't. He was one of I did like him. Um, PD. I remember that. Good morning to you, Mark Haynes. Yeah, Mark Haynes. Um, he really died young. I was really kind of shocked about it. He had a couple. He just laid it out, right? And he said one time that in a moment of candor, said, what are we doing here all day? I mean, this is all machines, you know. And I just kind of looked to Susan. I smiled. It's like, yeah, they make up stories and stuff. He couldn't stand it. From what I understand, he couldn't stand being in the studio and around some of those people. He would, they say, walk out the back of the building when he was on break, and just to get out of the building and sit on a stoop outside and smoke a cigarette. He couldn't stand being around them. But I don't think, and nobody knows, right? Nobody, I'm not, please no, I don't, and I don't subject our members to this. Um, I, I say all the time that, where the market goes and the big number and so forth, it's just a parlor game. Nobody can get it right every single time, and therefore, you're going to be wrong more than right. Um, and the market has a way of, defying it. So, but that isn't how we trade. It isn't how we invest, right? So that a lot of people may not understand that. They may say, well, then why would I want to follow you if you don't know where it's going? I'm like, okay, all right. Um, but I'm inclined to think that the market highs that we have seen this past year, that we won't see them for at least 10 years, at least. That I don't believe you can have I don't think you can be back to 4 and 5% interest rates without having done some significant damage. We're not going to know what it is and how bad for another 5, 6, 7, 8 months. I don't think so. And I don't think the market has even begun to price it in. I think and I don't know what it is. They got really, really spooked for them to do what they did as fast as they did. And I think other parts of the world, including the euro, are going to have some real issues with the dollar strength. And I think it could be unsettling. But in any case, I digress. Any questions on what we're doing, how we approach it, how we use some of the tools? I could change the view here, but you see the writing that I have up here, and I kind of dress this up. And if I change screens, I lose all that. I have to put it in again. So I don't want to do that. But so we have other views, and we have this swing machine that is giving us a full view of all the markets, what they're doing. And it was between 5 and 5:30. Everybody should know there is a war room in the Treasury. It opens at 4 a.m. And that's really when the markets start, right? That's when the calls are going out to hedge funds. Hedge funds are going back and forth. Big money is swapping hands. And that's when the activity starts. And then they bring in the public in about 10 minutes. We look at the NQ on swing machine, and here it is on the 5-minute, which is at 5:35. Now, please, for those that are at home watching this, you're seeing it, some lights and so forth go off. There is a technique for trading the swing machine. We're not trading it here today. We're trading another little program. It's not so little, actually. It's quite an involved program, but and that's what it's done. It's done since 6 p.m. last night. Virtually no draw. Now, it hasn't been peak to peak, but we got off to a good start. These are our signals. The driving signal is the 5-minute, and the 5-minute went long at 5:35. entirely possible, entirely possible. Much like last week, that a 5 minute lasts all day, could last a couple of days. And the 1 minute will trade against these larger time frames. And there's a technique and a skill set that we can't get into here that we do get into on the Q school that we offer folks. And we teach folks in the very beginning, the first couple of days, how to trade swing machine and get them trading it. And then we go from there. But you're on delay. So these little videos are not meant to be handing out the fish. They're just meant to create a little awareness of what others might be doing. So I'm going to shut up and let the markets open, and it'll be what it'll be. You know, on swing machine on an hourly basis, we've seen signals on an hourly signals last for 2 weeks. You know, be up tens of thousands of dollars. It's really amazing. Any trades that you see going in up here today, at least for now, I'm not sure how long we're going to be on, but are going in robotically, right? It's not me putting them in or out. Good luck. Any questions, let us know. And we're going to be underway here in about 2 minutes. Okay, so we also have you on swing machine, and gold is really getting rocked. Gold is down $30. This is always the problem with, making long range, bets. Um, you would think that gold, how is it gold never broke out? This is the issue there. If gold is an inflation hedge, if it is, how is it never broke out when we have the inflation that we have? And if now they're fighting that inflation, well, then presumably gold's going to suffer with a stronger dollar, So it is really, been one of those that defies maybe some logic, but they'll explain it after the fact. Bottom line is swing machine is got it short. And, if you want, if it's a market, which it is like any other market, then we just simply trade it. And we collect these things called dollars and do something else with the dollars. On the CNBC thing, I do not have a TV in my office. I haven't watched financial media in probably since 2010, 2011. I might see something or a headline or something come across the internet, but I don't, and I certainly don't watch CNBC at all anymore. It's just too aggravating, disgusting, actually. So all right, and then we got ourselves another little trade in there. Okay, that's the machine. That's the first trade here this morning since the market opened. And this little program has done $2,200 since 6 p.m. Beautiful. No fuss, no muss, no greed, no fear, no anxiety. We'll just let it run. Now, we're going to do the same thing. It could happen while we're doing this live, may not. If we come back more than half of the account, if we come back to $1,100, I will shut the strategy off. We'll come back and do it another day. Meantime, we'll let it run. Just to give everybody some trade characteristics or trade performance on this specific strategy running since 6 p.m. last night. The total net profit is what it is, 2,200 to the penny. Profit factor is 1.69. The total number of trades, 25. We've had 25 trades. Percent profitable, 52%. Largest winning trade, 492. Largest losing trade, 537.40. Maximum consecutive winning trades, 4. Maximum consecutive losing trades, we've had maximum consecutives. It appears 7. I'm a little suspect on that. That would be, a little, I don't think that's correct. I think it's total. It appears to be maximum consecutive winning is 3 longs, 3 shorts. Maximum consecutive losing, 4 longs and 3 shorts. I don't think they all came at the same time. So that's a little misleading. And the trading period has been for 17 hours. Now, percent of time in the market is high at, versus the strategy we were running a lot last week. This particular strategy is 43% in the market. So that's pretty high. Let's see, average time in trades is only 17 minutes. Average time between trades is 37 minutes. So that's what it's doing. What do we do with that, right? What do we do with that information? Well, we watch it, we pay attention to it. And then what do? We measure it against the performance report going back weeks or months. And then that gives us more insight. And let me do just that. Bear with me. Oop. And, it's not what I want. Strange. Oh, I hit the wrong button here. So when I look at the performance report going back over the last 6 weeks, so this is the performance report over the last 6 weeks. That's pretty darn good. And we're running very, very close to it, right? So this is, let me bring this into view. Let me show you what's going on here. We open this up. Okay, so this, oops. I have some writing on Zoom that blocks what we got here. So we'll kind of take advantage of the space that we have. So over the last 6 weeks, the strategy tells us we should be running at a profit factor of 1.58. All right, so for the past 18 hours, we're running at 1.59. It's pretty interesting. And now over the 6 weeks, now we don't know, right? We're going to do that much money, might do more, might do less. If we stay with it, the percent profitable over the 6 weeks is 54%. Over the last 18 hours, 52%. So we're running really, really close to the performance. And so it gives us more detail. And we can come in here. Average time in trades, 28 minutes. We're running at 13 minutes. So that may slow it down over time. So that's just an example of what it is we're doing when we're running these strategies. We want to be measuring what we're doing over a period of time to the back test, over a period of time. 6 weeks is just 6 weeks. 18 hours is just 18 hours. Okay. We're getting a little bit of a sell down. Let's take a look at Swing Machine. Yeah, they're coming back. Market's still very heavy. Members, if we're broadcasting live on YouTube, members are coming in and out at various points, maybe on YouTube, but certainly here. And we have a live Zoom broadcast all the time when we're up and running. Any annual member that wants to know exactly what we're running, exactly what the settings are, you just let me know, and we will send you a little private note. The strategy is proprietary to us. All our annual members have exactly what we have, and I always disclose exactly. We don't have the size. It's not like there's tens of thousands of us. We can't impact the price action, and one iota. So there's nobody gets hurt from us sharing our settings. So those on YouTube, if you have any questions about what it is you're seeing, just in trading in general, whatever it is, you want us to plug something in, we're happy to do it. We're not going to talk all morning. We're not going to pontificate. I don't know how Peter Schiff does it. I listen to him, man. He goes on and on and on every single day about the Federal Reserve. I mean, it is what it is. They're not going away. They've always been a part of this market. It's more out there than ever. There's always a narrative, and it does seem like this narrative of a pause or a pivot, has captured the imagination of the market. When we get into the throes of the recession and that is the narrative, that's when it'll get really grinding for everybody else. For us, just another day in the market. For our members, this is the SMC Mod K. And we were doing some work over the last, sorry about that. We, over the last few days, several days, last week, we have a member that has been working. This is what happens. We have members, annual members, and they, they pick and choose their markets. They pick and choose their charts that they want to look at. I think central, hopefully, to everything they're doing, they keep Swing Machine in view. They can trade. So we have members that trade just Swing Machine visually. We have folks that trade it robotically. But this particular member who's doing very well has really, actually, we have more than one that has attached themselves specifically to this strategy, SMC Mod K. And now we've had this strategy for some time, but we have it went through a radical overhaul back a couple of months ago, and really empowered this thing. And when we do that sort of thing, all our members get an update, get it updated. Well, one of the things that I want to make sure that I mention here for our members is this particular member. He wanted the trades to he wanted to make sure that they alternated. Now they're not here. I didn't turn that feature on. They appear to be alternating, right, for the most part, but sometimes they don't. Like, so for instance, here's a buy, here's a buy, here's a short, here's a buy, here's a short, here's a buy, here's a short. So it appears they're alternating, but all of a sudden in here you'll see, let's see if we got back-to-back buys, short. Yeah, they almost all alternated. That can be the case, but he wanted to be, the way I have it, they may not alternate. It's possible I could get another short here. So I want our members to know that we have built in an additional switch so that a person running the strategy can force it to alternate if that's what they want to do. And we sent him a beta copy, and he's working with it this week. We'll be eyeing it right now. We're not doing it right now, but we will be eyeing that feature, and we will all benefit from his experience and his eyes on it, because when he gives us the green light and says, "Hey, yeah, it's doing exactly, no issues," we will update that program, and then we will send it out to everybody again, and they just simply override it. So it's very much it gets into the area of collaboration. It's great, a lot of different eyeballs, a lot of different experiences, a lot of different perspectives, all trying to do the same thing: extract money from the market, and to do it in a mechanical, robotic fashion. So that's what we're doing, and that's a glimpse into what Stock Market Caddy is all about. At least we try. Now everyone is paddling their own canoe, though. We're not making specific recommendations. We're doing this now on YouTube, so you can see what it's like, see what it's about. We're not making specific recommendations. You're on a 30-second delay, I think it is, on YouTube. So we're not here saying you should be following this at all. We don't, we're not saying that when you take this program that you're automatically going to make money. I don't want to give the impression for folks that might be passing through on YouTube that this is some gimmick, that this is some way to jump the shark, that you don't have to learn about the markets and don't have to learn about trading technically and so forth, because if we did that, that would not be right. You do. And that's why I was discussing it with Susan even over the weekend. 3 weeks is a minimum amount of time, intense time, that I need to spend with a person to make sure that they understand what it is we're doing. I can't do it in a day or a weekend. I just can't. And if we tried to do that, or didn't do it at all and just sent things out, we would probably have many more members, but it wouldn't be responsible. It just wouldn't. And I'm not at all going to do that, because it just isn't. It wouldn't be the responsible thing to do. A person needs to have good acquired trading skill to begin to understand what it is they're trying to do, and what programs they want to choose, and go through the settings, because in the end, they're responsible for them. right? It doesn't matter what I do. It doesn't matter what, any specific member might do. It only matters what you do, right? So, but it's very, very empowering, and you can just kind of sit back and, now the machine has done, what it's doing here, and you're seeing it, but also swing machine's not doing so bad either. This little short came in on a 1 minute at 9:33, and if a person did take it, they'd be up 1,500. Now, we will give you a little bit of a glimpse. We would recommend in the beginning, we do recommend in the beginning that our members not take a 1 minute in the opposite direction of the 5. That would constitute a counter trend trade. You can do it down the road when you get really, really good and real comfortable. But we would prefer that person only take the trades in the direction of the 5. So if they waited, they'd only be up $800, and then that would be fine. So when we look at, and it's only a small, everything's sample size, right? So when we look at the performance report of a specific strategy, and it goes back 6 weeks, that is a sample size. Maybe it's big to you, maybe it isn't, but it's good size. It's good size for what we're doing. The past 18 hours is a small sample size. It's small, right? But but if we stay with this program and we run it all week, now our particular member has been running this program for months. We have another member that's running this program for months, actually all year. And I checked with him. He's like, I'm not running anything else right now. I'm having a ball, which is great, which we also teach, right? And they know there's other things available, but they just choose, hey, I'm making my money. What do I care? So great. They got other things. But when you begin to add up trading time, trading robotically, and then can measure the performance of the real-time performance with the back test, if it's close, what we actually use the word efficiency. It's either, if it's running right now, it's running 100% efficiency. Oh, well, thank you, Mr. BBs. That's Rob. Thank you. So for this one sample set, we're running at 100% efficiency. Maybe after a few more days, maybe we stay there. Maybe we run a little higher. Maybe we drop to 50%. So if we drop to 50%, then you might be able to apply that efficiency to the back test. So if the back test says, hey, over the last 6 weeks, you should have made whatever it was, 35,000, then I think it would be reasonable to say, you know what, as long as you're, doing what you're doing and the hours you're doing, and if that's the efficiency you're running is 50%, then you're probably not going to make 35,000. You're probably going to make about half of that. Maybe that's acceptable. Maybe it isn't. So that's how we use the back test information, right? It's a model to measure exactly what you're doing, right? And the slightest little changes, this is where it can either be overwhelming or it can be very empowering for the individual, right? Some people find it overwhelming, I had one person that chose not to go on, and after the Q school, he was like, this is going to take me a year. And I laughed. Like, a year? No, it's going to take you a lifetime. especially with his work ethic. He didn't have the best work ethic. He was just wanted to come in and fire off a trade. That's not us. We're trading as a business. It's a business. I don't spend the time that I spend here, um, for just pick off a trade. No, no. So, but that's how we use it. And it's very, for the person, the mature trader, it can be very empowering. So there are different things that can impact the result. Maybe it's the hours. Maybe you should be running from 4 a.m. to 8 a.m. Maybe you should be from 8 to 20, maybe we shouldn't run from 11 to 2, or maybe the profit target needs to be bigger. Maybe this does not have a stop loss on it right now. Does just has a profit target. We're running it really tight, so I don't think I need a stop loss. If it was wider, maybe I would. And so you can affect. So these programs come with all different speeds. You can run them fast, you can run them slow, you can run them wide, you can run them narrow. Can do all kinds of things with them. We can use them to hedge. We're getting a nice sell down here. Yep, going right back down to the lows of last night. Maybe we do get a Monday, an October Monday crash. It's looking pretty ugly right now. We get the 5-minute VIX is trying to come up, a little muted. This NASDAQ is just, now the machine, got that little bit of trade from here to here. You didn't get any of that. Maybe you would have got it. Maybe if you had a little acquired skill, or I had a little better acquired skill, but I opted not to intervene, right? So I'm not intervening on any of this. So it's always a trade-off. We don't have to get it all. We don't have to get the very top or the very bottom on every single trade. That isn't realistic. Not going to happen. Can we just get a portion and collect these portions? That's what we're doing. And we're using technology to get it done. But I love doing this, Don. And there this is Mr. Be Busy in Belgium. He's got some late hours. Totally agree what Don says. He is mastering the markets. And I must say, I love it. He is at least 80% right. Yeah, that's all right. Not about being right. So I'm okay with that. But you love doing this, Don. And there are too much people thinking get rich quick scheme. Yeah, that might be. And that's why I maybe I, cost members or something. The way I always think about it is that I just think it works out for the best. I don't want, I don't want to say I don't want the right people. I don't want to sound like that, but I just think that, we want to be forthright and things work out for the best. The people that come to us have many times shadowed us for months. We hear that frequently. Don, I've been shadowing you for months. And we just think it works out for the best. If there's, somebody that pops in and they just see like, oh, okay, hey, he made $2,200. I'm going to sign up. That's, that can be a little bit of a concern too, right? We don't really want that. So I try to take pains to explain, more of a perspective. And the only way I can describe it is a mature trading perspective, right? You realize very, I think, early that it has to be repetitive. You have to be able to do this over and over again, or it's not gonna work. You have to be able to do it over and over, right? So, but thank you. I'm going to, excuse me, I'm going to grab a cup of coffee and just kind of sit back and watch with you. We're going to let this thing go. Again, if we come back more than half the high water mark, which right now the high water mark is 2,200. So if we come back to 1,100, we will shut it off. The strategy. YouTube, I'm not sure how long we're going to run, but we'll let it run. If you have any questions, anybody passing through has questions, want us to plug in a particular market, um, and but these are tools, and we have a bunch of them. You're only seeing a very small fraction that are designed to help you manage your risk, manage your time, manage your trades, help you to stay on the right side of the trade. Is your account going to go from peak to peak to peak? No, nobody's account is going to do that. Nobody, unless you're Citadel and have the orders in advance. Um, but you should, operative word should, have a good, healthy profit factor. And if you don't know what a profit factor is, then that's a bigger problem, right? So good luck, everybody. The reason why you can't and it's kind of a fool's errand, you can't compare your performance with anyone else's. And I don't care what it is you're doing or what it is they're doing. They don't have to be with us, but it's just a fool's errand to do because, as an example here, there could have been a trader that was running this last night, exactly the same thing. And maybe when he got to up $850 last night, he turned it off and hasn't turned it on again. I've kept it running. Is that a good thing? Is that a bad? But that person may have stopped, as an example. That person may not turn it back on until, Wednesday at 4 a.m. and might run it for 2 hours and make another 850 and he turns it off. There's just too many variables. And now it just depends. Now we have members, I'm running one mini contract, and that is my size of choice, right? Now if we're hedging, we'll run a little bit more than that. Maybe one mini and hedge 5 micros and sort of things. Could I run more leverage? I could. I choose not to. I don't have to. So I don't. Did I in the past? Yes. And when I was an immature trader, you get that kicked out of my ass. So I don't do it. I don't have to. And so I don't, just don't. So it's very comfortable. But we have members that, they're just, maybe in a different place, and that's okay. It's all different. We have some that use micros, but we have some that say, Don, I can't do this. I can't put in this time for one mini. Then I don't know. They're trading 5, 10 of them. I mean, none of my business, but the process is the same, but they're in a different place. Okay, so we got another little trade here. And now it is not trading swing machine. So I always, so I immediately look to, so when the trade goes off, I immediately look to, what's swing machine doing? Swing machine on the 1 minute is ripping against the short. So it is coming up. It's kind of interesting. And, but the 5 minute is still short. So I hope this thing goes up, hits its target and gets the hell out of the way. I did not put that in. Machine did it. Strategy. Now, what has to be practiced in using swing machine, which maybe, maybe it isn't fair. I don't know. We show it on YouTube where folks don't have the instruction, don't have the time. It's very quick. I mean, it's measuring real time, and you are on delay too. So if folks are trying to mimic it, off of YouTube, that wouldn't be a very good thing. But it really does help us, helps me anyways, to know exactly where a particular market is and where the threats are. And you know, it's just a really, really nice tool. So I can see, the 5 minute is still short. So this market, the Nasdaq is still um, the bias is going to be down. The 1 minute is trying to come up. The center point here, the point of contention is this 11,014 to 11,040 right in here. Very, very tight spread right now. There is a technique to getting to this place of robotic mechanical. There are some very specific steps that we have to ask folks to put themselves through. If your trading career has been like most people, looking at something and picking something off, that's a habit that has to get broken. It may not be that easy, right? But there are specific steps, when you're doing it. Um, I've been here. I've been talking live and with YouTube and everything. I have not placed one order, not one, and I don't want to. I really don't. And there are times when I'm looking at the strategy um, and it's like, man, it's not what I would do. It's not what but I try my, thing in the back of my head is don't intervene, try not to intervene. Now there's some strategies, you may want to intervene, they're doing something very specific and very, very short, but, um, and that was something that we learned and I learned, from teaching Susan. Isn't that friggin' crazy? And we just got another winner there. Isn't that crazy? That looked heavy to me, didn't it? That looked really heavy. um, so, and now we're out of the way. Now it looks really, really good. And I wish I was still in it. Oh man. Oh, I'm joking. That, you know, those are the emotions of a discretionary trader. It gets old. It's old. Once you're out of it, you're out of it. Feels great. You know, one of the gentlemen, one of the members that we have, his name is Caleb, and Caleb came to us last. It's been a year now. Yeah, last November, December, and had never traded anything. And so but he has just adopted it, and it's just incredible. I mean, and he's really smart kid. He's a kid, and he's just really smart. And he's a software guy, and he just looks at it with such new eyes and new perspective, and in the stuff that he gets into and the stuff that he presses on is great, and he's doing great. Now, the settings that I just shared with our members that are in the Zoom, right? So you guys are watching on YouTube. We have members that patch into Zoom, which is live, virtually, I believe it to be instantaneous, or, any difference is imperceptible. And those settings I optimized them. No, just a few, not a ton. I optimized them over the last several weeks. How is it, that an optimization process can decide these various settings? How is it? Could it be that I don't think for a moment that any one other person or institution or anything or hedge fund is running exactly the same program that we're running? I don't think so. I think the likelihood of that is like slim and none. But they're running some damn thing. They're running something. And it may not be on this view. It may be point and figure. It may be whatever it is. It may be on time and sales. May not have anything to do with the chart. May not be. May be some sort of arbitrage. Probably is. Very, probably a sophistication that would make our heads spin. But our little program might be picking up on some of their, some of the parameters. That's the idea. Maybe. I mean, how is it, even for an 18-hour period, how is it that the back test of 6 weeks could give us a profit factor of 1.59, whatever it is, and I'm running 18 hours and I got a profit factor like 1.59, 1.6. It's kind of crazy. Now, it's only, and you might say, but it's only one day. It is. Small sample. It is. You have to know that, right? Very, very mindful of that. It always is. But it is intriguing. It is neat, when it runs, right on top of it, or a little bit better. Five minute. So we'll see. She's gonna not looking so good right now, is it? But in any case, we're not. The 5 minute is this 9:45. That's like an anchor. I'll mark that up. This one. That's a problem for the NASDAQ, right? So that could be there all day. Just we had one earlier. You might say, well, Don, we had one earlier. Yes, we did. In fact, here it is right here, right? See, it had one trade long. Since 4 a.m., it had one trade long. This is the second trade short. And this could be there all day. And this thing could be up, could be up $5,000, at the end of the day. Could be. And then again, it may, now in order for this to flip, what has to happen? The 1 minute needs to go long. And then the 3 minute needs to go long. And then the 5 minute needs to go long. And it needs to stay long for a minimum of 5 minutes. This is on Swing Machine, right? Now we're not running Swing Machine. I could and have it matching a chart and a beautiful paint bar and other tools, and it would just be a perfect match. We're running something very specific here and still have view of Swing Machine. So I always keep this Swing Machine present. It just is a beautiful thing for me. That's what I look at. No matter what chart I'm looking at, could be point and figure, could be a day, or whatever it is. So I want to be able to see what's going on in the here and now, the here and now. So now we've been running. I want everyone to know what we're doing here. And we're not trying to hand out, as people may come in and come out and see this later. We're not handing out the fish, right? We're certainly not trying to do that on YouTube. You're on delay. You could get hurt if you tried to shadow these things, after the fact. And it's not why we're doing it. We're doing it just to show you what it looks like. I always kind of wondered, like, what does it look like? We had a member, come to find out, I didn't know it at the time. He worked for a hedge fund, or an oil hedge fund, only like about 6 or 7 guys out of, I won't say where, but he told me later. And he said to me, he goes, Don, you don't know. This is what he said. He goes, you don't know what you don't know. And at first I didn't know. He goes, you don't know how good you guys are. He goes, all we do is trade oil. And he said, and he was with us for months. He goes, it's ridiculous. He goes, we spend more time bullshitting about whatever. And he goes, and you just don't know how good you guys are, which I found, I was flattered by it. So we just, stay in the present. It is powerful, right? It is powerful. It's just, if we can't know what's going to happen in the future, and we can't, then why not just track what's going on right now? I mean, I don't know. Just seems to make sense. But we have another member, and I don't like knocking anything else, but and it's not, but it's funny, right? Yeah, I find it funny. He finds it funny. The Elliott Wave stuff. Oh my God. On a daily basis, they got thousands and millions of people following that shit. God, it's crazy. You ever see that? Oh, wave 2, wave 3, little digit, big digit. I mean, like, there's another winner. Now we're foregoing, right? We're foregoing the bigger runs here, and the machine is just doing it, right? We're picking up ground balls, and there's no emotion. I didn't put any on. Why would I have any emotion? I didn't put any of them on. It's not my fault. Oh, if the program was not running, right? And there are programs, bam. Yeah, and see, you're on delay, right? We should probably, let me throw the clock up here so you can see how much of a delay this is on YouTube. It's YouTube, not Zoom. So my time, so that, I don't know if you can sync to that. Probably not. You'd have to look at the price action, I think. You'd have to look at the price and then the second hand, So I think it's about 30 seconds. And again, it's a Zoom thing. But if it wasn't running, so what if the performance told me the profit factor is 1.6 and she's running at like 1.1, I'd be like, I don't know. I'd shut it down. Maybe, I'd take a little bit of money and shut it down. But right now she's running pretty well. Look at this. I just went to swing on the other markets. We get the S&P down too. We got it down 27 handles. This could get really ugly. Yeah, market is just, and gold's getting smoked. And Rob is in Belgium, and I don't have the dollar up, but the dollar is strong. And I think it's going to get a lot stronger, folks. Now, whether it should or shouldn't is another question, but and so other currencies around the world are getting really hit. And I don't think, I mean, I've said this, whether the Fed, I don't think the Fed's going to pivot. They may pause or anything, but regardless, you can't have done what they've done without there having been tremendous economic fallout from this in the months ahead. Absolutely cannot. Absolutely cannot. I think one of the Fed governors, Evans from Chicago, said, oh, we can do this without unemployment. That is bullshit. He said it today, he said it this morning. I saw it come across, he can do it without any impact. That's crazy. Is absolutely going to be a tremendous amount from what they've already done. They have taken the yield on the 2-year treasury from this time last year from 0.25 to over 4%. That is staggering on a percentage basis. I'm glad they did it. I think it should go higher. I'm shocked that they did it. And I think something, has really, really spooked them. And, we could talk about it and speculate about it. I think it's the ramifications of this at an individual level, at a city or town level, at a state level, at a country level for the United States, and then internationally is mind-blowing. And I'm sure that those MIT eggheads, they're smart as a whip. They practice, and I think it is out of MIT that they come. I don't think it's Princeton per se. I think they practice something, behavioral economics, and they have this, they have it mapped, and their map told them, something profound about a year ago. And these interest rates, this is the thing, even at 4%, it is still a negative interest rate. That's how far behind they are. With inflation running at 8, and that they admit, with an interest rate at 4, we're running negative. See, and what's happened is by repressing these interest rates for as long and as far as they did, individuals, but institutions and pension funds, we were reading about it, hearing about what's going on in Europe or in England. It isn't going to be just England. It isn't going to be just Europe. It's going to be everywhere. What they did is they leverage up. So if you have a pension fund that is paying out obligations, they got to get a return of whatever that is, a fairly safe return, a fairly repeatable return. So when they were ratcheting down interest rates, and if those folks were buying US treasuries, maybe they were buying, 20 years ago, maybe their pension model was, we're going to buy these treasuries or gilts or boons, and, we're going to get, 6% a year on whatever the duration was. And they built their models and their payouts. And as the interest rates get ratcheted down, they don't get their return. So what did they do? They borrowed money. They borrowed money on the short term and they leveraged up. They bought more boons, gilts, treasuries. Now they got a big effing problem. They got obligations. They're over leveraged. they can't get not only can they not get the return, they run the risk of blowing up. And that's what everyone is speculating. Is something going to break? England had an episode just, a week or two ago. Their pension funds, the hedge funds, probably a lot deeper than we know. And what do? They say, okay, well then we'll bail. We'll back off. What happens to the currency? It goes to the shit. So their currency gets weaker, and then and we're not back. This dude's not backing off at all. They're making the dollar even stronger. I mean, a huge headwind. It's really interesting. Now, I think that this lower currency is going to help these other. This is where, from an export standpoint, I think the low euro. Rob's not going to like the low euro unless he shorted the euro and bought the dollar, which Swing Machine did a year ago, 1 year ago, on a weekly basis. Short euro, long dollar. And I wouldn't trust anyone, anything. If they pivot, if they pause, I don't know. I don't know when the hell they're going to do it. I don't know, but I know I can put those currencies on Swing Machine and know when to do it, when they actually make the turn. But the same thing could happen here. And will this Fed, will they yodel? Will they give it up? What do I mean by that? That's why I think, this inflation is I don't think they're gonna tame it. I don't think they. Oh, it's gonna be interesting. Mm-hmm. Has nothing to do with what we do day in and day out. This is a story where you want to store your money. Dollar story where you want to store your money. All is crap. All is super crap. So cash is king. Right now, right now, it is a bigger than dawn on dollar and pound. I have lots of friends from UK. So pension is paid in pound and live in Spain. They have had 20% decline in income because of Forex fluctuation. Yeah, the inflation. Yeah. The tax, they're doing the same thing here, did you guys see already today? What a crock. They gave that Bernanke, the son of a bitch that launched a lot of this stuff on our central bank. They gave him the Nobel Prize of all days today. They gave it to him today before the damn thing blows up. The dollar, because of inflation, the purchasing power has been cut in half. Here in the States, same thing. Paid everybody off with, funny money. The dollar is strong, but it still probably isn't keeping up, with inflation unless you leverage it, right? So won't get into that, but it's a very individual thing. But yeah, they gave him the Nobel Prize. What a joke. God almighty. I think this guy, I couldn't stand him then. I can't stand him now. I attributed all this to him. An academic stooge. But anyhow. Now we could stop, right? I mean, if you're running this and you're to the good, and you've been running since 6 and you say, hey, I have my $3,000. You could stop. Don't have to keep running. Don't have to run tomorrow, maybe take a couple, days. This short on the NQ at 945 is up 1,600. Now we do have people that trade Swing Machine, just Swing Machine, and they'll match it up. They do some things, and and they like to trade it visually. They want to be in control, or and that's fine. Now we have had some members. There are some limitations. We can program multiple time frames to do different things. There are some swing machine on the radar is happening tick for tick, intrabar. Great. Stop. It is beautiful. It is beautiful, isn't it? It is. It's like my baby. I like showing it off, a beautiful baby. So the radar is tick for tick, intrabar. These things, it's updating, and so we're getting that view. If we use multiple time frames on a chart, the 1 and the 5 and so forth, we lose a little of that perspective. But one of the things that and we've had other members, over the years, and they just, they didn't, I don't know, but you can, with futures, you can run competing markets, right? You are competing timeframes. We haven't done it. I was thinking of doing it this week, and maybe I will, where we're running the 5-minute on one chart, swing machine, and maybe running it just long. And over here on the 1 minute, run it just short. And maybe on the core position, we use a mini. And on the hedging position, we use 5 micros. And then it's competing with itself. And I said, well, why in the hell would you do that? For the beginning trader, they don't, it's beyond them. I mean, they're not aware of that. They're just thinking, why would you do that? Why would you run, a competing system? I mean, don't you want to put on a trade and make money on the trade? I don't understand. The reason why we do something like that is to reduce the volatility in the account. See, we're looking to run a trading system over a period of hours, maybe a period of days, period of weeks, period of months. And we want the account to be relatively, how do I put it? It's not going to go peak to peak, but we don't want it to be too volatile. So it's kind of hedging. So that's different, right? For most retail traders, they're not thinking like that. They're focused, super focused, highly focused on executing a trade, a single trade every day. And their account goes way up, their account goes way down, their account goes way up, their way go way down, then it goes up and up and up, and then it goes way, way, way down, and they get worn out, and driven to, to drink. And I don't drink, I don't smoke weed, I don't drink, sleep like a baby. This is a beautiful thing. So maybe we are going to get a little flash crash today. Let's take a look at this. Oh, this isn't so good, is it? Swing machine is all over this. I can't, again, if I change the view to swing machine, I lose all these print words and so forth, and this very pretty look. That is an overlay by Zoom. And if I change, then I lose all that. And so I don't want to change my Zoom look. But I can see swing machine on the VIX 5-minute at 10:35. It went long, so that's not good for you don't want to be bullish after 10:35. And certainly, and it seems to be a responding to the market. The ES went short. The ES went short at 10 a.m. It's up $880, $900. The NQ, you can see it went short at 9:45 in Europe, 2100. That one you see. The Dow went short at 10:40. This is on swing machine. The Russell is short at 10 a.m. Gold, gold must be, I don't have the dollar up. The dollar must be running They are selling gold. They are buying dollars, it appears, but they are definitely selling gold. And gold went short on, this is the 9th. Yeah, that would have been last night at 7:40. That trades up 3 grand. So this is not so good for the bulls. This could accelerate. And I need to look at some option work. And Rob says, he goes, I think sometimes you smoke weed. I feel like I do sometimes. There was a time in college. I didn't smoke it in high school, thank God, and I didn't smoke it after college. But in college, yeah, I did a little of the wacky tobacco. Um, although I don't think, yeah, it's hard to believe, that, I guess, I don't know, old fashioned, I guess it's all legal now, but I guess it's what they're doing today is nothing that was back in the day. So they tell me, but we thank you for the kind words. I'm looking at the VIX. The VIX seems to be responding to the market. It doesn't seem to be leading. Um, the VIX went long on a 5 minute at 10:35. The S&P went short at 10. So that's what I mean. I could say, the VIX is responding to it. See, I'd like to see, I don't want to see a crash. I mean, a flash crash. I'd rather not. I'd rather see the market stay orderly and keep trading ranges. Um, but because of where we are, because not just technically on the market, talking the S&P, interest rates, and then also seasonally, it's not a really good period here because October in the States, a lot of times markets bottom in October, late October, and September is usually the bad month. And what I think it is that a lot of the money managers, their fiscal year ends the end of October, the beginning of November, and so they're locking in. What could happen here is we have some individual stocks like NVIDIA, the individual stocks, and people are nursing here in the States. They got big losses this year, which is shocking to them. For 10 to 12 years, they've never had any losses. Now they got losses. And so the market, in November, you could have some people that they'll want to book some of those losses for tax write-offs and offset, so you could have some, another wave. I'd like to see it. I'm not sure we're going to get it. I'd like to see the market, kind of stable out here and give us yet another little bounce. And I'd like to see it get back up to 4,200. Quite frankly, I just don't think it's going to do it. But I'd love to see it because they'll sell the shit out of it going into March. But yeah, it has been a steady crash. Rob says a slow motion crash. It really, I mean, you look, I can change the NQ. It's not really, it's been slow, but not, oh, I can't. Yeah, I can't. I got it blocked. I better not mess with it. Maybe I can do this one. No, I can't. I got this thing dressed up for, there we go, through Zoom. So we use this writing on Zoom. It blocks some of my settings. Now, the previous low on the S&P was 3574, 3574, thereabouts. We take that out today. This thing could turn out to be like shit through a goose. It could really, yeah, they could really panic. That's not looking so good at this hour, 11 o'clock Monday. I'll take a look at the performance report. Not the performance, the trade analysis on our strategy. And let me do this. And I'll be able to tell you since last night, how is this thing doing compared to the performance report, right? So the performance report was talking about a profit factor. First thing we want to look at is that profit factor. And it was saying it was running about over 6 weeks at about 1.6. And it's running a 1.96. It's running a profit factor on the long side of 1.83 and on the short side 2.15 for an overall profit factor of 1.96. And let's scroll down and give you some of the other details. Total number of trades, 27, 14 longs, 13 shorts. 53.85% winners on the short, 57.14% on the long for an overall percent profitable of 55.56. I'm all right with that. Maximum consecutive winning trades was 3 and 3. Maximum consecutive losing trades 4 and 3. All right, so I'm okay with that. what you're looking for that in something like that is, psychologically, if you get something that has, well, this is actually not the back test, but in a back test, Susan pays very close attention to maximum consecutive trades. And, if she sees something that is producing, like 10 losing trades in a row, she knows psychologically she'll have a hard time, grinding through something like that. And we've been trading, let's see, the longest, no. So average time in trade is 16 minutes. Average time between trades is 36. So she's trading better than the performance. And we're up, $3,000. If it comes back and the account gets to 1,500, we're definitely shutting down. Right. And I'm just sitting here, just chatting with y'all and making sure the electric stays up and watching what we watch. And now we also have options that we're paying attention to as well. Now we're going to, we actually sent a picture of this. I haven't got back to doing it. We had a hard drive crash 3-4 weeks ago, and then we had the damn hurricane, but we had built a tool and we need to rebuild it. It's beautiful. I failed to save it. So we have the notes, so we can rebuild it. It's not an issue, but I made a mistake and I failed to save it. And just by chance, my hard drive crashed. And it's a tool, it's a radar, and it's going to tell us for folks that trade options, what are the best options you should be structuring, right? Right now, with volatility as high as it is, I think, the best options would be credit spreads, especially credit put spreads. Can be hard to do, but I think the probability of profit is going to be much high than trying to get in here and start buying calls. Too expensive. You can see just visually, this particular strategy, I mean, it's done well, right? But, left a lot of money on the table here. It left a lot of money on the table here. This one, it hit it on the screws, left a lot of money on the table here. And that's just this one here, it hit it right on the screws. That's just fine. Whether you're trading a machine or program or you're trading yourself, when you start leaving money on the table, you're doing well. You're trading well. You want to be leaving money on the table. It means you're you're trading within yourself and within reasonable expectations. Okay, so the strategy is just put in another trade. What type of trade would that be? It wouldn't. It's not comfortable on swing machine because the 5 minute is short. The 1 minute is in fact ripping. That happens to be the case. Now, again, the program is not swing machine on this particular chart and on this particular program. I mean, we could do that, right? We could have, but it isn't. But I can see what's going on here. So I'll come and I'll look like, okay, well, it's kind of interesting. It looks a little interesting to me. It looks a little overdone. can begin to draw out ABCs and so forth. I'm not. Mentally I can do it, but um, my attitude is just leave it alone. Um, the 1 minute is ripping against the short, so it's a counter trend to the 5 minute, and we'll see if it can handle it. It's not a trade visually that I would have done, right? I wouldn't have done that. I don't want to get into that necessarily, so I'm not trying to I don't want to be in conflict with a strategy, right? So I just need to let it do its thing, but it doesn't look quite right. No more than this one, I think it was over here that didn't look. There was one of these didn't look quite right to me, and it worked out. So we'll see, right? She's got a 55% win rate here since last night and a pretty healthy profit factor. So I got wood in the trade or wood in the account. So we'll see what happens here. For the benefit of those that are on YouTube, and I know Rob knows this, Tina knows this, but there may be others that don't, and they're passing through and saying, please understand, you cannot have a winning trade after trade after trade. I can't do it. The machine can't do it. Nobody can do it. So if you are emotionally attached to every individual trade, you feel real good when you get a winning trade, and you feel real bad when you get a losing trade, you're not going to make it. Okay. You will be a wet noodle. You won't last. And then the other piece to this too, is this hodling business, hold on for dear life. I can't believe, as smart as these young kids are today, and they are smart, they're smart as whips. um but boy, there's some things that they're not too smart on. And that's one of them. that that is an old saw. That is an old Wall Street, and that hodling business. You know, we said it when AMC was at $50 a share, and GameStop, and look with those. AMC, I think, is under 10, and they don't want to hear it. And the same thing with the Bitcoin crowd. They don't want to hear it. They want to believe in that. And I'm like, man. So um, we're not out to change anyone's belief systems. Nope, I'm not. So we just describe what we're doing. We give you a glimpse of what we're doing and how we're going about it, what our perspective is. If it lines up with your view, and you think we can, which we think we can help you around the edges, save you some time, get these tools on your desktop. That's why we do it. But I'm not out to, you know, people want to hodl. Have all the power to them. I hope you hit it, whatever it is. Maybe a year from now, the dollar is at $1.45 or $1.60. Now one of the things that, you know, um, that I think would produce, I was thinking like, what would be the catalyst? Um, Somebody takes out, I think at least the knee jerk reaction. I'm not sure his replacement would be any better, but somebody takes out Pooty Poot, you know, I would think that we would get a rally the likes of which would be just unbelievable because oil would go down and and I think it's gotten to that point, you know. Um, I think so. Um, some people say that the replacement could be worse. Could be, probably is. But I think the knee jerk from a market standpoint, um, that's all. We're just talking about markets here. It's obviously reprehensible what the hell's going on over there. But I bang, we just got another one. What did that do? Oh, okay. All right. So this is a situation. See, okay. So she took a profit and she repeated the order right there. That is and for the benefit of our members that are watching this, that is it isn't a weakness to the program, but it is how it's written. It doesn't always do that, but it did do that here. So one of our members that has been working with us a lot wanted that to stop. He didn't want it to repeat. And so I want everyone to know, and in particular, and we can do this with any strategy. And so we built in a switch that it just says alternate trade switch. And when you set that to true, it would not have, it wouldn't go long again. It'll just go from long to short, short to long. So it took a profit and then immediately went in, and doesn't do it all the time. I do not have that switch on. We probably will run it. So it's 11:25 here, New York time. I'm in Tampa, Florida, but we will probably bring this strategy to an end at noon and bring down YouTube. If you have any questions, feel free to email, feel free to call, feel free to, if you have TradeStation, boy, it's going to be a really, really smooth transition for you. If you don't, learning curve will be a little bit greater, but we know their platform pretty well. Let's take a look at what's happening here when we totally shut down. Yeah, so now we can see, and you can maybe see it too, the ES on the 3 minutes gone long, ES NQ 3 minute. You see it up there, actually 1 minute. So the market's getting that little bounce here. And I'm rooting for it. Not that it's going to matter, but I would like to see this market rally out of here today, tomorrow, maybe into this week. I think it'd be better, even though I'm bearish. Work off this. I don't like it when it gets this fearful, per se. See how we do. You're welcome, Jeff. You're welcome. And we're vetting out, Jeff. You don't have it yet in your program. You have what I have here, and it's doing its thing. But you see that condition here where it took a profit and it repeated. Caleb asked us to develop an alternating switch to keep it from doing that. So we did do it for him, and he's going to vet it this week and let us know. He's got eyes on it very intently, and if it passes, his work will update everybody's mod K, and we'll describe exactly where the switch is and what it's doing. It basically forces on any configuration, it forces it from long to short, short to long. He wanted that feature, so we'll see what he thinks. Yeah, exactly. Exactly. I have it ready to go, but he's got it over the weekend. He'll be looking at it today. Let's make sure that it's doing it. I think it is. And then once he gives me the, confirmation, I'll make sure that everyone gets a copy, but I'll make sure you get a copy right away. Yeah. Yeah, it did it here. I kind of wish it hadn't either. I would have rather just taken the profit. It may cost us here, so we'll see. Hi, everyone. We have been running this robot since 6 p.m. last night, and we're going to turn it off at noon, right? Noon, 6 to 12. And it's done very well. If anyone on YouTube wants to know what the trading character, or not characteristics, but what the trading specs are, let us know. We can tell you the profit factor. We checked it about 20 minutes ago, 30 minutes ago, maybe before this last trade, and was running about 2.0, winning percentage of about 55%, doing pretty well. And but we're going to bring the strategy to a close, and all good things come to an end. And same thing on YouTube. We need the screens, we need the processor. But if you have questions on what it is you're seeing, what it is we're doing, you know, you're welcome to go back on the video. You can hear us a little bit. We're not handing out the fish. We're just trying to create some awareness of what a robotic mechanical trading approach looks like. We've been doing this a long time, folks, right? It hasn't been 6 months, hasn't been 6 years. Susie and I have been trading this way since, God, 2002, 2003, thereabouts. I did the IBD, Investors Business Daily, primarily, did that approach from 1981 right up until the .com. And fortunately moved to the sidelines, became more technical, and we did a couple of other things that we looked at, but I abandoned all the fundamentals in 2002, 2003. We just, we knock on wood, we had done very well. That approach, the IBD approach, was very successful for that time. It was interesting, cup with handle and all that stuff, and investing, for fundamentals. And I was working at that time. I was, in a surgical arena, and didn't have the time to be in front of a screen. But by the time we got to 2002, 2003, and I had spent quite a bit of time, I always had an interest. So I was very busy traveling and doing what I was doing, but I was spending a lot of time on the markets. I can say now. I didn't say it at the time. And we got to a point where I said to Susie, "It's like, Susan, this is really, it's kind of ridiculous." It's kind of ridiculous. I was rather, I grew to be disgusted with it. And again, we came through not unscathed. We took a few punches on the .com. Everyone did, but we were okay. I knew it to be a bubble. And, but I said, going forward, I don't want to do it again. I don't want to put our life assets into the stock market and be in a position where I gotta be hoping for and have all that angst and all that stuff. Because I said, what good will it do? What good will it do? If when it gets time for us to, pull the hook, so to speak, and if we get a 50%, 80%, 90% crash on this stuff. And we had all the stocks of the day, JDSU and Lucent Technologies and all that stuff. So we sat down and said, okay, well, what do you think? I said, and so Susan hadn't really been doing it. I said, Susie, the way that I see this is that money flows in and money flows out. And if we could develop systems to profit as the money flows in and flows out, then we don't have to, get involved, and have that, that risk. Now I said, we may not have the, the big, we're not going to have a 3Com. We're not going to put, $5,000 in a 3Com because they had a Palm Pilot and turn it into $100,000, which we did. It's kind of ridiculous. We're not going to have those. but the trade-off will be we won't suffer a 50% decline or an 80% decline, 2 years before we, want to retire. So it's a trade-off. And so we sat down and it made sense. Susie's a bright girl and made sense and said, okay, how are we going to do this? And then set out to decide, well, what market? Okay, so we're taking this is the biggest draw that we've had. It'll be a shame that we finish on a down note, but we'll let the machine handle this one. And so I can, I very well could intervene here. I haven't intervened I haven't at all. So we're going to let it run its course though, right? The way we approached this too, by the way, when we ran this, we said that once we establish a high watermark, and 3,500 is a new high watermark, we kept saying that if the account drew back 50%, we would stop, right? So as we went up, we had that in mind, but we are arbitrarily going to stop right around noon. That's the plan. We'll see if we can end with this one last trade. This trade repeated itself. This is the first time it's done that in all these hours. How many hours we've been running? 18 hours, something like that. And so we have this is a strategy that we've had for some time, although we overhauled this strategy in a big way in the last several months, maybe in the last year. And so we had a member that was pointing that out to me. And it's funny that, the first time it does it, and so maybe this is what, he was seeing and experiencing. So Don, if we could eliminate that. So we built in a switch. He's actually trialing it. I didn't turn it on. I should have. He's trialing it this week. And it's a switch whereby he can turn it on and then it will force, no matter what his configurations are. We got all kinds of other configurations in the strategy. He can choose the number of contracts. He can choose the time. He can choose all kinds of things. But this switch will force the strategy to go from long to short, short to long. So it would not have repeated. And that would have been a beautiful thing, right? I would have rather not have done that. So I understand why he was asking for it. It was a little tricky to get it to do, but he's going to vet that for himself and then for us. And then what we will do is we'll update that program and then and explain, what we did and why we did it. And then we send that program out to our annual members, right? And we do that all at no additional cost. We're constantly doing that, right? We're constantly, as folks, learn this, learn that, want this, want that, we will just update that and just keep updating and sending things to our members. And makes sense. So it's sucking back up. Now, none of these trades, so not one trade did I put on, not one trade did I take off. This is fully robotic. Now, we made a video last night and we made it at 8 p.m. From 6 to 8, 2 hours, it made $890. A member was running that may have chose to stop and take today off. Okay. We kept running. It's not right or wrong or anything. The reason why I mention that is for the benefit of those coming through YouTube. We don't make any claims and we sometimes get asked, well, what's my performance going to be? I can't say that. I can't even imply that because I don't know what one will do, right? It's just the nature of it, right? So I hope that, but for the new person, existing established traders, and I think understand that. I know Rob gets that from Belgium. He's in Belgium if he's still with us today. So, we're not, the asset gatherers, the people that run mutual funds, I want you to send them their money. They publish performance reports. Stuff. That's not us, right? We're not soliciting funds to manage. We're not making recommendations to buy or sell. We're not showing you this so that you can shadow and, make $250 and stuff. I don't think, you know, we're not doing it for that reason. And if you're doing that, I think you're missing the forest for the trees. That's not what we're doing. We're just trying to show you what it might look like and show you over an extended period of time, right? So we and by the way, this is being taped too, right? So this is we're live here. I think we took a little break overnight. So if you look at our live sessions, but we're also taping this, and we'll compress. We've been running now for 11 hours on this video, and we'll compress this 11 hours down to like 2 minutes. It'll look super fast. But in our live section on YouTube, you can see it, tick for tick. Hey Teddy, how you doing, buddy? So the reason why we do this is to show you what's possible. We have numerous strategies and different approaches, right? This one has been real popular with a number of our members, so, and we wanted to kind of showcase this, but a number of different things. And the settings in here, they can choose. Our members can go in and they can choose like the number of contracts they want to run. So if you want to run micro contracts, you can choose the number of contracts you want to run. You can choose the hours that you want to run. You can choose the profit targets and trailing stops. And it's all built into the code. It's going to work much smoother, much more efficiently than if you were building it what we call a la carte. Well, this would be nice if we can finish on a high note here. Be very nice, actually. Some of the other features that we can do, like we can go in to the performance report, and I'll try to show that. I will show that in the video when we compress the video. And when we shut down, before we shut down at noon, I'll review what the performance characteristics were for this strategy over the last 6 weeks versus what we did overnight here, about 18 hours or so, right? If I got the hour count with 6 p.m. to 6, yeah, that's over that. But one of the other things that you can do, like if you go into the performance report and it says, the average winning trade, we're in the trade approximately, I think it's like 28 minutes. So our members can go into this program and they can say, oh, okay, so I'm usually in a winning trade about 28 minutes. So maybe I don't want to be in the trade longer than 30 minutes. So even on an advanced bar type, like point and figure or, some other style of chart, range bars, they can actually set an exit to exit after 30 minutes. It's kind of cool, right? And so I'm going to open up the, let me show you, as we do this, right? If you guys don't mind, I don't think you do. This is the time, right? So this is right here, 11:48. Let me show you the trading performance report. And you can take notes on this if you want, because then I'm going to show you what it's done. All right. So for this previous 6 weeks, this is 6 weeks running this program full tilt. Right. So I'm not using hours. We could trade it from a certain time, but trading it full tilt, wide open. Trading it. We also have a trade counter, right? You can set the number of trades. Well, I think even long and short. So there's all sorts of things, but running it just wide open, the profit factor would have been 1.68. Would have had 400 trades. Now the percent profitable 54. So remember profit factor 1.68. Maybe write it down, because I'm going to give you some other numbers in a moment. I'm going to tell you what it's done overnight. So 1.68. Okay, the percent profitable, 54%. Right, so this is maximum consecutive winning trades. It had 9. This is over 6 weeks. Right, And this is an important number for Susan, maximum consecutive losing trades. If she sees a really, really high number, that can be troubling for her. She doesn't want to have something, 10 or 12 loses in a row. That can test one's resolve, right? Especially if it happens in the beginning. Usually doesn't. All right. So the trading period, I take it back. Trading period, I thought this was 6 weeks. This is 14 days. 14 days. I'm sorry. I thought it was 6 weeks, 14 days. And we just took a winning trade. Okay, so even better. All right, so and then here, this is a further trade analysis over 2 weeks. Yeah, 2 weeks. I forgot. I thought it was 6. Average time in trade, 28 minutes. 28 minutes. Average time between trades, 50 minutes. All right, so these are some of the things that we're interested in. The performance report. That's what the equity curve looks like over the last 2 weeks. All right, now I'm going to say something that is going to, not for Rob, not for our members, but for others that might be passing through that are not familiar with trading as a business, trading day in and day out, not familiar with that. This isn't AMC, let's ape it. This isn't Bitcoin, let's hodl it. This isn't, GameStop, let's crush the shorts. That's not what we're doing here. This isn't Tesla's coming out with a new truck. This isn't inflation's going to do this and deflation's going to do that. And the dollar's doing this. And it's not any of that. It's very quiet. It's very methodical. It's very mathematical. So what I'm about to say is this: what's happened in the past may or may not happen in the future. That's true. So what I just showed you is what this strategy would have done set with the settings that it has over the previous 2 weeks. But it may not do that in the future. Well, where most people will react, not new people, new traders that say, well, then what kind of crap is that? I can't count on it. I'm joking, right? I'm being a little facetious here. I don't think anybody here, even the folks that are coming through YouTube, is saying this, but they might. Maybe somebody comes through, what kind of crap? I mean, if it's showing me you're going to make 30 grand in 2 weeks, then I want to make 30 grand. If I'm going to buy this thing, well, you're not going to buy it, right? You're not. I'm not going to let you buy it. You can lease all of them, but you got it. But also, unfortunately, you got to get the education, because I won't let you lease it unless you get educated. I won't. It protects you. It protects me too. I don't want folks to get hurt. I can't prevent it totally, but I can do the responsible thing, and it would be irresponsible for me not to. So what does it mean when I say, well, all right, it may not happen in the future. So I'm going to pull up a report from TradeStation, and we've been running this strategy now for the last, how many hours is from 6 to, I don't even know. Is it 18? It's more than 18. So like 20. I think maybe it's 18. Do some quick math. So I'm going to pull up a trade analysis, and I'm going to tell you what this strategy has done for the period from 6 p.m. last night to noon today. And if you say, well, Don, that's a really small sample size. It is. And you would be correct in saying that. And just the fact that you're thinking about sample sizes and so forth, that's really, that would be really good. Let me bring this up. Okay. So we have done what we've done, $3,915.40. The profit factor that we have run in this sample is 2.22. Remember what the profit factor was? If you wrote it down, I think it was like 1 point something, right? So we've done better. Now that means when you have a profit factor of 2, that means you're making $2 for every dollar you lost. Well, that's good. Right? That'll work, you know. The on the long side, the profit factor was 2.27, and on the short side, 2.15. All right, that's kind of interesting. How many trades has this thing had, Don? This is for last night. Okay, 29 trades. 16 on the long side, 13 on the short side. Now, with that new switch that our member asked for, his trades will be 13 and 14, 14 and 13. He's going to alternate, right? The percent profitable. So we had 29 trades. The percent profitable, 58.62%. Well, that's all right. That's pretty damn good, actually. You know, you can make money. You can make money with a winning percentage as low as 0.3%. You know that. Now, most retail traders, they're like, what? They're losing 7 out of 10 times. They'd be a wet noodle. They would be consumed. They would be, this is crap, because they think they got to win 9 out of 10, 10 out of 10. No. The long trades, we've won 62.5%. The short trades, 53.85. That's what we did. So, but stay with me, because I'm not selling the program, and I'm not selling you anything. I'm not. I'm just showing you how we approach our trading and how we use this information. So bear with me, and I'll explain what I do with this. So we come down now, there's other information. So the trading period has been 17 hours. So I was right, 18 hours. Now the percent of time in the market is high, a little bit higher than I like, 48.15%. I'd rather be in the market less than that. I'd rather be in the market below 30%. So, you know, this is a program that I'd want to, you know, keep a close eye on, because that's high for me. For me, maybe not for you. All right. Now, other trade analysis. Average time in the trades. How long did the trades actually last for? Now, remember, in the back test, it said 28 minutes, I think 28 to 29 minutes. In this session that we did, it was 16 minutes, so a little better. The average time between trades, so we're in between a trade, we're not in it. The next time I get a trade, it says the average time in between is 34 minutes. I have to wait 34 minutes. I got to go find something to do. I got to get on the treadmill and work off that pizza Susie and I had on Friday night. Yeah. So what else can I tell you about this? All right. Now, the most important piece that I can share with you is, what do you do with this information? All right. Now, the 2-week back test is not a very big sample in and of itself either. There's 2 schools of thought when doing a back test. Some people want to do a back test that goes back a long time, you know, 6 months, a year. The reason why, when I think about why I only went back 2 weeks, was I was going to optimize and I wanted to get a current view of the market. I didn't want to go too far back, right? I could have, but once we know what the strategy has done over a period of time, 2 weeks, 6 weeks, whatever you choose to use, and then as I am trading it, I'm measuring what I'm doing against the sample, or against the back test. This is my sample. So after doing this for 1 day, 2 days, 5 days, my sample size increases. So I think that, you know, if my back test was 2 weeks and I run this for a week, I get a 50% sample of the back test. And if I'm performing close to the back test or better, then I can I think it's reasonable for me to have more confidence in the back test. And that's how we use it. I think it's a lot, hopefully a lot different. And maybe an improvement over chasing a trade, trying to get this done, that done. So in any case, it's 12 o'clock. We're going to turn the strategy off and we're going to shut down YouTube. I want to say thank you for all the folks that tuned in throughout the period, in and out, but the strategy is now off. And we're also going to bring the video to a close. We've been taping this for almost 12 hours. We're going to compress the video down to about 2 minutes. We wish you the best. Folks are welcome to call. I'm going to go grab a lunch and we'll get back to work this afternoon. Good luck, everybody.